Since the start of this year, Bitcoin is now up over 150%. And I don't know about you, but the past few weeks have felt a little like how the 2021 bull market did. Now, it was a little less than a month ago where I started this unofficial series on my channel where I'm documenting just one of several portfolios that I own invested into crypto. Right before even filming this video here today, my portfolio at the time of filming the video was worth about $132,000. I went ahead and checked the last few days. It went up as high as $180,000. It's come down a bit. It's at about $160,000 today. And needless to say, we've been able to make some money out here. Not only that, but our members inside of our private group Kaizen have also been crushing it. And I know we have a ton of subscribers here in the Jungie Nation, up currently a similar amount on their bags. Now, if you're watching this video here today, I want to just say it's not too late and you're still very early and you have a chance of getting your investments ready for what I believe is another bull run coming. All right, so to begin, I'm still very long-term bullish on Bitcoin, and that is for three main reasons. So as most of you should know, crypto moves in cycles, and the way those cycles work is that we get a bull market followed by a bear market. You see, I believe the bear market has been over for a while now, and the bull market has indeed started many months back. If we pull up the literal definition of a bull market, it's the fact that we have confirmation after a bear market low has already been reached. Now, if we take a look at the charts, the crypto bear market officially started in November of 2021 after Bitcoin reached its all-time high of $69,000, and it began to drop into the $15,000 level over the course of a year. Now, this year was a decline of a total amount of 77%, and it marked one of the most severe downturns in crypto bear market history. More than 2 years have passed since the bear market beginning, and I believe that Bitcoin's bear market low was indeed hit in November of 2022. Taking a look at your screen, you're going to notice this chart here indicating Bitcoin's bottom that was reached when it hit that orange line. From there, we have an ascending green line to illustrate Bitcoin's upward price trajectory since then. Now, although Bitcoin has experienced occasional fluctuations since the bear market's low, the overall trend right now remains upwards on the long-term charts. At Bitcoin's current price level of around $40,000, it would need to drop nearly 65% just to retest this cycle's low. Now, look, I'll say this, there is always a chance that another drawdown can come, but I've come to realize that no matter how much TA or lines you draw, it is near impossible to make 100% accurate short-term predictions every single time of any asset. So this is why I personally prefer to invest over the long term based on fundamental reasoning and using past historical data. Now, history doesn't always repeat itself, but it does tend to rhyme. Taking another look at your screen, this is a graph showing you Bitcoin's historical profit from the beginning of Bitcoin's birth to the end of the most recent year on Bitcoin's price. Since the beginning of Bitcoin's opening price in 2009, sitting at 5 cents, to ending and closing at the end of the year to 77 cents, we saw a 1,448% yearly change to the upside. Following that, from 2010 to 2011 to 2012, Bitcoin went up 500%, 2,000%, and then 300% before retracing 46%. Now, it was after that where Bitcoin had another run where 3 more consecutive years it started going up. It was up 70%, then 157%, then 549%. In 2017, Bitcoin pulled back to around 40%, and since then, the year after, Bitcoin went up 52%. After that, Bitcoin went up a total of 815%. Now, 2019 was really the beginning of Bitcoin's bull run, and it was from there we actually started to see that correction happen once again. This was at a time where Bitcoin came back towards the $58,000 level at the beginning of 2020. We then saw Bitcoin close at a lower price, and then the year following that, it went down another 37%. Now, what can we learn from this data? Well, first of all, in the span since 2009 of Bitcoin's opening, we've gone through 10 bull markets in comparison to the 4 bear markets. Taking a look at the charts, statistically, you'll notice that there's a 60% greater chance of a bull market happening rather than a bear market. One thing I've also found fascinating is that we've also never seen a Bitcoin bull market get cut short to just a single year. Instead, if you take a look at this, we've seen Bitcoin heating up astronomically as the years go on. The whole point I'm trying to make here is that statistically, Bitcoin's bull market happens quite frequently rather than if you were trying to play the opposite side as someone who is a bear. Second reason, the Bitcoin halving event. Now, previous Bitcoin halving cycles have resulted in major price increases. It turns out during the first halving event, Bitcoin was trading at $12, and a year later, it was trading at $1,178. Now, this year was a 9,716% increase to the upside. In the second halving, Bitcoin went from $657 to $19,800 in a year and a half, which marked a 2,913% increase. Now, in the last halving during the COVID pandemic, Bitcoin went from $9,000 to $65,000 in less than a year, and then made its $69,000 all-time high before the end of 2021, which marked a 6 times increase since its original price. Now, while I still believe this is far from enough data for any meaningful projections, if the above pattern continues, this would mean we would see a 7-fold price increase during the upcoming fourth halving era, which would take the price into the $138,600 range. Now, reason number 3, a Bitcoin spot ETF is more than likely to get approved in the year of 2024, and this year would allow access for institutional demand to come pouring in. Now, look, it's not even just us expecting a Bitcoin ETF to get approved for this upcoming year, but it's a lot of different analysts too. Take as an example, Bloomberg intelligent analyst James Seffart, who says the window for approval is also happening between January 5th to January 10th. Now, there are about a dozen different firms that have applied for a Bitcoin ETF. This includes Grayscale, BlackRock, Fidelity. Now, in the past, I've always been a little bit more skeptical about this actually getting approved, but we have been seeing good news. This year is the fact that futures-tied ETFs for crypto have still been getting approved all within the last year. This includes VanEck, Bitwise, Valkyrie, ProShares, and more. Now, if you're still a little unsure that the Bitcoin ETF getting released would incite a new bull run, think about it like this. For as long as I've known, there's been a clear divide between traditional finance and the crypto market. I see the ETF still being a glue or almost a bridge between making these two worlds accessible for even more investors. It's not only that, but institutional and regulatory approval through these ETFs are going to provide more confidence to investors, contributing to a more mature and stable market. With more mainstream investors diving into Bitcoin through those ETFs that might get approved, the volatile price swings of the crypto market might become less severe. Not only that, but I've seen predictions from different analytic firms that Bitcoin ETF approvals would result in anywhere from $14 billion of inflow all the way up to $155 in inflow to possibly even adding $1 trillion to the overall crypto market cap over time. Now, those are just going to be 3 of the main reasons and the narratives behind the crypto market formulating right now. That's not to say there aren't any additional reasons. There's actually a lot more, but for the purpose of this video, if we focus on at least those 3, I believe those are still going to be the main catalyst on what drives the crypto market forward in this upcoming bull run. So knowing all that, how am I personally investing into the market? Well, let me open up one of my portfolios. All right, so since the start of this year, my portfolio took a pretty hard hit. Granted, I did transfer some of my crypto out. I was able to lock in some profits, but a year ago from today, this portfolio was sitting at about $80,000. Luckily enough, even through Bitcoin hitting some of the lowest points, I kept holding on. It was through March, the first quarter going into the second quarter, where we start to see a little bit of growth. It wasn't until actually October of this year when my portfolio started to pick up. Now, this past week, my portfolio went up to as high as $180,000. Today, Bitcoin and Ethereum in the market had a pretty strong pullback, even dipping down to $165,000. But for the way that I've set myself up in the past few years, I'm still more excited than ever before for what's to come. Now, to break down my portfolio holdings, right now we're actually holding about 75% of it between Bitcoin and Ethereum. That right there is going to add up to be about $120,000. What you'll notice in terms of the performance and how much our account has been able to net and lock in on profits, it's been about $180,000 over the past few years. Now, you'll also notice I have a larger bag in Ethereum than Bitcoin, and that's because I still personally believe Ethereum still has a higher upside than Bitcoin, seeing that it has a lower market cap. Personally, for me too, I love staking my crypto just because when you're holding it for at least a year, you get tax benefits, so you're not paying short-term capital gains on that crypto. And with someone in my situation where I'm in a very high tax bracket, that makes a huge difference at the end of the year. And for the fact that instead of trading daily, I like to go long on my assets, staking has just made a lot of sense. So with Ethereum, I staked this as soon as that update had come out when they decided to make the upgrade to the network. I'm currently earning 3.46% APR, and that is about $1,700 completely passive. And at this point, I've almost earned about 1 whole Ethereum back, all by doing nothing at all. Now, like I mentioned earlier in this video, this is just one of many different portfolios that I own. And what you'll also notice is that the remaining of my tokens are all in separate altcoins. Now, as the market continues to grow, I plan to trade my Ethereum for other higher risk narrative plays. Moving forward, here's my plan. I set up reoccurring buys every month, so I keep stacking up on both Bitcoin and Ethereum, no matter where the price is at. From there, I trade about 10 to 30% of that Ethereum going into a basket of my high risk plays that I'll go over shortly. Now, by the way, way, those high risk plays will always be less than about 5 to 10% of my entire net worth. As bullish as I am on the crypto markets, I tend to not play with more than that because at the end of the day, crypto is still very risky and it's not a guaranteed asset that's going to continue always moving up. So far with the plan that I've set going into Q2 of 2024, this is still going to ensure that I get the most amount of exposure to ride the ongoing wave of pent-up demand behind the halving and ETF narrative. Now up next, you might be wondering which altcoins I'd be interested in investing into for the upcoming bull run. Well, here's what we got, which leads us in to the Coinbase Wallet, which is the most user-friendly self-custody wallet, unlocking the entire world of crypto, including collecting NFTs, earning yield on your crypto, play-to-earn gaming, participating in DAOs, and more. Coinbase Wallet is available as both a free mobile app on iOS and Android. Not only that, but you can also check them out as a desktop browser extension for both Chrome and Brave. Coinbase Wallet puts you in control of your crypto keys and data, where you can safely store your crypto and NFTs in one place. Now, nobody, even including Coinbase, can access your tokens or NFTs without your recovery phrase that you get. This means you can easily go from cash to crypto with support for buying crypto using a bank account, local payment method, debit or credit card in over 130 countries, where you can fund your Coinbase wallet with just a few taps or clicks. Now, it's not only that, but Coinbase was also awarded the best crypto wallet of 2023 by Forbes. And not only that, but they won the award on the best crypto wallet for beginners by money.com and CNET. Now, this wallet here was also the most downloaded wallet in the US over the last 5 years, and you can get the very best price for swaps on over 26,000 plus coins across all major chains using Coinbase Wallet's built-in swapping feature. Now, I value security and easy use the most, and that's why I've been an active user of Coinbase since 2018. You guys have seen it. We've made countless amount of videos on it for many, many years, and it's a full circle moment. It's something that I'm so proud of saying, like right now with Coinbase being the first exchange I ever use, is a company that is working proudly with us as a sponsor. Thank you to Coinbase for sponsoring this part of the video, and on to the next. All right, so if you're rather new to the crypto space, here is one tip that is going to help you significantly in being able to make money within these markets, and that's understanding the vital role of emotions and how that ties in with the financial markets. What you'll notice, especially from the last bull market, was a concept of narratives and trends that started popping up, and it shaped the beliefs that different investors had, where they started investing, trying to make more money, and eventually you either make a lot of money or you end up getting stopped out. Whether it was PayPay coin, Dogecoin, Shiba Inu coin, these are just smaller examples of narratives that influence the market through those trends. Now, in this section of the video, I wanted to go over 4 of the biggest crypto narratives where I see huge potential in. So the first one is BRC20. So if you guys are OG subscribers, you guys will know my involvement that I had within the NFTs. I can confidently say that I was a first mover within the space too, because we got in way early before NFTs ever even hit the mainstream media, or it was even a topic of conversation that people were having on YouTube. Now, NFTs were really fueled by Ethereum. Ethereum's token is fueled by something called ERC20. And on the other side of that, we actually saw a narrative come up a little bit. It started to die down, but I still see a possible resurgence of this called the BRC20 narrative. So the BRC20 is an experimental fungible token standard using ordinal inscriptions on Bitcoin. Now, the introduction of ordinal NFTs sparked a whole new wave of interest for Bitcoin, with the community beginning to experiment with the potential use of Bitcoin's network as a way of storing immutable data. So basically, instead of using Ethereum to power your NFTs, there is a possibility people might gravitate even more towards Bitcoin, seeing that it's the largest market cap project and still the most popular cryptocurrency to exist. Now, I don't know how it's going to play out. It could never play out at all. But if you're looking to get exposure within that market, you see the bull narrative on that, then the crypto that you may want to look out for is called Ordi. That right there is short for Ordinal's Wallet, and it's the leading non-custodial wallet in the BRC20 ecosystem. The second narrative to be on the lookout for is GameFi. If you guys are on Twitter, if you guys are watching any other crypto channels, I'm sure you have heard of GameFi at a certain point this year. For anyone who doesn't know what it is, I believe NerdWallet actually explains it the best, and they quote, "Traditionally, the video game industry has been made up of play-to-win games, or perhaps more accurately, pay-to-play. From sticking quarters into a machine at an arcade to buying a console game at a store, game gamers have historically been the players and the payers. Now, in recent years, some video game developers have added paywalls inside games, so gamers have to spend additional money to unlock certain features of a game that they've already bought. GameFi games, in contrast, are play to earn, where players can earn cryptocurrency through playing the game. So what makes GameFi different is the fact that you can change the ratio of time to money to get a different amount of fun and maybe a little money on the other side as well. So as someone who can say I've grown up playing a lot of games, actually my first YouTube channel was recording my TV screen with the family DSLR, playing Call of Duty, whooping some kids, and then moving to playing League of Legends. And this was at a time I had my whole entire rugby team. We go on these little rugby tournaments and we go into an IHOP. We'd all pull up our laptops at the IHOP like a bunch of nerds and we'd be playing League of Legends. I mean, like, look, I am someone who's had a lot of experience with games. I've loved games as a kid, but one thing that really made it seem like it's a waste of time, it's just the fact that you have to spend money and you're putting in time to something where you're not getting any real ROI from. So I'm hoping that all of this changes through the crypto market. Obviously, right now, the gaming industry is still massive. It's still continuing to grow. Even according to Statista, the 2022 revenue from the global gaming market was over $390 billion. With the hopes of GameFi, where you can now play a game to earn money, I believe this here is going to be the future. When it comes to the gaming industry, you have to realize that for any good game, as an example, your boy recently beat the Spider-Man game. I'm proud to say that. And it only took me 5 months, by the way. You guys should be proud. Even something like that took developers a long time to create. So imagine how long it might take for us to create a AAA game through the blockchain network. Now, I know a lot of this went into development a few years ago. So within the next few years, we should finally start seeing some games surfacing. So here are a few games that I'm personally looking out for. This is Gala Games, Illuvium, and Sandbox. These are also 3 popular games and narratives that fueled the previous bull run, and I believe that they're going to have a solid positioning in the upcoming bull run, but a lot of this is also still high risk because if the game does not develop further, if they don't add upgrades, or if it just ends up flopping, obviously that would probably mean it's a project that you would want to avoid. Third narrative here, and this is something that I'm sure every single one of you know about, and this is AI. Now, the potential for AI in the crypto world is immense. As most of you know, ChatGPT has been around. It's been one of the trending topics of 2023, and it doesn't seem like we're going to slow down from there. This here is where AI tokens are lining up. AI tokens are crypto assets that leverage artificial intelligence to improve user experience or help out with scalability or even help out with security within blockchain networks. Now, this here is still a developing market where more work needs to be made for us to know exactly what projects may be the ones that people all onboard next. So if you go on something like CoinMarketCap, you can actually go ahead and find different AI and big data cryptocurrencies here. Now, some of this is subjective. As you know, AI only recently started popping off, but before, I don't think these projects came out and started their development knowing that they're going to be AI projects. So like with any investment, proceed with caution and make sure you do your full research onto knowing how they're actually moving towards the development and the narrative of AI within crypto. 3 tokens that I would highlight still is Injective, the Graph, and Render. All right, so the 4th narrative that I'm personally on the lookout for are called RWAs, or tokenization of real world assets. Now, these here are tangible assets that exist in the physical world. So think of real estate, commodities, art, or even US treasuries. Real world assets are a significant composition of the global financial value. So the value of global real estate is $326 trillion. The value of the gold market is $12.39 trillion. RWAs is focusing all on the principle of tokenizing those real world assets into digital ownership. This here is where you then use blockchain technology to store and distribute the ledger behind tokenizing those RWAs. Right now, there's still a clear divide between owning assets in real life versus getting stored digitally on the blockchain. I personally believe as the time goes on, we're going to start to see a bit more bleeding from one side to the other, where we start testing the boundaries of using blockchain technology to give us the benefits with the real life assets that we own. As an example, if I buy my car, the way I show ownership is through a pink sheet of paper that I can lose at any time. Or say you buy a property or you buy a house, the way you show ownership of that is through a piece of paper that you can lose, that can disappear at any time. I believe there is true value, use case, and benefits when using blockchain technology for different current applications within the real world. If you guys agree with that, then you want to look more into the RWA narrative. And with some of the cryptocurrencies here, you can look into Rio or the Relio network. You can look into Alliance Block or Credit Coin. Now, this is still early on. There are a ton of other projects that are looking to develop in this space. So in case you're bullish on the different crypto narratives that I just talked to you about, I'm going to show you my process for how to pick strong crypto investments following that. So there are 3 ways that I like to start, and this is easy for any beginner out here. It doesn't take that much work. So number 1, we pretty much just covered it, and that's to follow the current trending narrative. To do this, I'd first go into Twitter. I'd go ahead and start researching other accounts that are talking about certain narratives just like this. It's from here where you can go through different threads, find different accounts, and you might find some surprisingly decent coins that could lead to a higher opportunity of making money. Like always though, if you do find a certain token, go on CoinMarketCap and try to find the token. From there, analyze the market cap, look at the price action of it, see if there's any type of news going on, articles surrounding it, go on their Twitter page, see if their followers are real, see their engagement, see if there's potential, and also check if there are reputable sources like VC funds or big influencers or crypto research accounts that are also following that account. Now, another way to research coins is finding ones that are in the accumulation zone. To do this, go on a website called dropstab.com. From here, if you go on the left side column, you'll see accumulation with the lightning bolt, and this is where you can find certain cryptocurrencies that are in that accumulation phase. Now, the accumulation phase is when trading volumes are significantly higher than usual. What we've seen happen in crypto is that when cryptos begin to accumulate, it usually happens for a few weeks, sometimes even longer than that, for a few months. It's in this time where you want to ride the momentum, and you can do that by using the data from this site here. Now, just because coins are accumulating for even like multiple months, it doesn't mean it's going to keep accumulating, and it doesn't mean that it's going to continue to ride up. I just wanted to show you this as a research method that I look into in noticing certain trends with different coins on my radar. Now, the third research method, something that worked very well in the previous bull run, was finding DeFi coins that are accumulating with the money locked. Now, the money locked is something also known as total value locked, and you can see this through a website called DeFi Llama. Going on DeFi Llama, you're going to see total value locked with a lot of different protocols and different cryptocurrencies. If I even go on chains, I can see where a lot of that money is being held. So obviously right now, Ethereum is a large majority of the pie, but you might be surprised to see Tron up here, which is another big majority, or seeing Solana or Arbitrum or some of these different cryptocurrencies that are now accumulating more money. Now, when we talk about total value locked, it's within the protocols where more money is getting stored. Now, just by seeing some of these cryptocurrencies that are accumulating a lot more and they have a lot of money locked, it doesn't mean that they're going to blow up. But this is still an indicator where if you're seeing a lot of money getting loaded up, usually it's a delayed indicator that the price action of it might move later on. This is not guaranteed either. This is just one other additional research method that you could check out. And another thing you could do is if you notice a crypto with a total value locked similar to another crypto, but one has a significantly higher market cap than the other, you might see a disparity where you start investing into the lower market cap one because they both have similar value lock. At the end of the day, none of this is going to guarantee any results, but it is going to be at least a starting point for some of you to start making money out here. So knowing all that, this is how I would personally structure a portfolio using what I call the triple lever framework. So the reason why I named it that is just think about levers. You have 3 of them. If you're trying to go full out, you're trying to risk all of it, you can obviously pull the lever all the way down, but there are ways that you don't have to commit totally. So I'd say for this, lever 1 is going to be your low risk profile. It's something that I've taken advantage of in the previous bear market descent. This is because a low risk profile is going to be a lot less stressful, and there's still going to be that opportunity for you to make money throughout this bull run. In this portfolio, it would be 80% Bitcoin and ETF. You would then have 15% into medium risk cryptocurrencies, and then 5% of high risk cryptocurrencies. Now, between Bitcoin and even Ethereum, these are 2 cryptocurrencies that often trade very parallel with one another. In the last 1 year, you'll see this, and even if we pull it to the all-time, look at just how similar these 2 cryptocurrencies ride. Personally, for me, I'm still a bit more bullish on Ethereum in terms of making more money within the markets, but if you do want to still get the same amount of exposure within the market with about the same level of risk, Bitcoin is still a great asset to have as a majority of that portfolio. portfolio within this low risk lever. Now, when we're talking about medium risk cryptocurrencies, these are going to be the top altcoins in the market that could 5 to 10x from their current levels in the next upcoming bull market. From here, you have Solana, Cardano, Chainlink, Tron, Polygon, Polkadot, Avalanche, which I think is heating up, Stellar, Cosmos, and Monero. Now, the high risk cryptocurrency plays, these are going to be your meme coins, your small caps, your micro caps, and these are going to be the ones that are generally less than $500 million in market cap. And even smaller than that, there are cryptocurrencies less than $100 million in market cap. And then you have cryptocurrencies that don't even hop on a DEX where you have to get in on a pre-sale and you're just crossing those fingers, hoping it's not a rug pull. Even with the low risk portfolio, you're still able to play some of that. Just don't be putting out all of your money into those very high risk plays. Now, the second lever, this is your medium risk portfolio. You do 50% Bitcoin and ETF, 35% in medium risk cryptocurrencies, and then 15% in high risk cryptos. Lever 3, high risk. All right. If you really love gambling, okay, you're someone who can take the pressure, go less Bitcoin and Ethereum. You can do about 25% of that and then 25% medium risk and then go 50% into high risk cryptos. So between those three levers, well, which one should you choose? Now, this question will depend on what kind of person you are. You can also create hybrids of these different levers that I talked about, and what works for you doesn't mean it's going to work for the next person. So dial in to see what is customized and ultimately works for your setup. Now, some key questions you want to keep in mind is how aggressive you want to be in the upcoming bull market. You also want to ask yourself, do you want to grow your portfolio slowly over time, or is your goal to 2x, 3x, or even 10x within the next bull run? You also need to know your budget. Do you have money to be able to invest into crypto, or are you struggling with finances and you're putting every single dollar that you have into the markets? If that's the case, you may want to really reconsider how you're investing, because like always, no matter what condition we're in, I would never say that you should be risking more than you can afford to lose. From there, you need to know how much time and effort you're willing to expand in your portfolio. There's some people who like to set and forget it like me, and there's other people who want to check in on it daily. Last but not least, you then need to have an exit strategy. This here is the most important. A lot of people get into crypto, they'll have the perfect lever, okay? You're like medium lever, you got your entire pie set up, but then you don't know what you're gonna do when you start hitting some of these targets. Now, a proper exit strategy is different for everyone. So this is why I'll just share with you what I plan to do to at least lock in over $1 million in profit in the upcoming bull run. So number one, I'm making plays based on narratives. What you have to realize with narrative plays is that they are also very high risk. I recognize that as a trader, that I am not someone who wants to be day trading every single time. I prefer to hold and make swing position plays. I'm also someone who prefers to trade more actively when the market is in even more favorable conditions. With Bitcoin at current levels, I'm accumulating those narrative plays, and this is something that I believe will still pan out over the following years, and even that long-term mindset that we mentioned earlier in this video. So for my own exit, I like to set targets and goals with a clear intention of how much money I want to make. If we have our Bitcoin all-time high estimated at around $130,000, we can begin locking in profits and scaling out of our position at around $100,000. Or if you want something more conservative, you can even consider the previous all-time high as a point where you can take all profits off the table. A lot of people assume that for an exit strategy that you have to like be all in or be all out. That's not the case. You can always scale your money out over time, and as you dollar cost average in, you can dollar cost average out. Now, when it comes to Bitcoin and Ethereum, that's generally the principle that I follow. But when we're talking about an exit strategy for altcoins, I'm usually in and I'm usually out once I'm hitting certain targets. In the last bull run, if we were up anywhere from $2 to $3 or even $10,000, I'd be in and I'd be out. I've realized that Bitcoin is the easiest coin to make predictions for. So my idea is to always use Bitcoin as a gauge for when to also sell other altcoins that I have. So something I realized though over the past few years is the fact that a lot of people don't have the time to be following trades and making these alerts. And you guys have busy lives. You got work to go to, you got family to attend, you got people to hang out with. So this is why we went ahead and created a fully revamped, upgraded group called Kaizen. Guys, I mean, obviously I'm a member of Kaizen because I'm the creator of the group, but something I love is that we constantly get updates throughout the day on multiple wins that my analysts have. So we went ahead and found some of the best coaches and analysts within the entire crypto market. They trade using leverage, futures, I mean, a variety of different tools. Some of them trade just straight up Bitcoin and Ethereum. And when I get notifications constantly, seeing these wins, it gives me a lot more reassurance within the market that it is possible to make money too. If you guys want to go ahead and join our membership group, it has full Discord access. You get all the alerts to it. Check out the link down below in the description. So to wrap up this video, let's go over what will happen next within the crypto markets. Personally, for me, I'm banking on the fact that leading up to the halving in the ETF, if my portfolio is back to at least even the $250,000 level, I'm going to start taking profits there. This is because there are 3 scenarios that are going to play out. 1, Bitcoin will dump hard in the next few months, and we could see levels from the $20,000 range again. But I personally believe that good times will still return and that the biggest bull run ever could possibly follow up next. The second possibility here is that Bitcoin goes up and we still have one of the biggest bull markets ever. Now, the last possibility, which I think is the most unlikely to happen out of all of them, and is that crypto never ends up recovering and it continues to go down and it just fades away as a useless asset that no one found value in. If I broke it down statistically, I think there's still a 35% chance that the crypto market could cool down. It could come back to that $20,000 level, but I still think there's a higher chance. I'd put it at about 60% that Bitcoin only goes up and we continue to accumulate over the next few years. If I do hit some of those take profit levels that I've set, my plan is to hold that cash into stable coins, wait some additional months, and then I'll be doing even more research to then find and seek those additional high risk, high return plays. Now, ladies and gents, this here is one of our more longer in-depth videos, but what I can assure you is that if you've made it till the end, you're gonna have a much clearer understanding of how to navigate these markets, and I'm sure you're much better prepared. If you are a real one, by the way, because only the real ones are watching this till the end, do me a favor and comment down below what you ate for lunch. I made a chicken burrito. I'm running a lot lately, trying to be healthy, getting in the macros. And by the way, when you guys do this, it makes me know that you guys are real people and it also helps the algorithm. So it's a win-win. Now, don't also forget to drop a like down below. Check out the links down below in the description. And thank you again for watching this video, and I'll see you guys soon. Peace.